I'm glad I didn't lose faith, because a lot of people during those times, they lost faith in the market and they never went back in. You know, that happened. It also happened in the dot-com bust. People left the market, never went back in. People do that, and they get completely embittered by it, and they don't live to fight another day in the market. So what happened was that the success came back. And so I actually pulled it off twice.
Yeah. Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Join me for some honest, unscripted discussions with other CRNAs who are transforming their financial lives. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today. And now, on with the show. Thanks for joining me for part 2 of my interview with Russ Maiolino. We're jumping right in here for the continuation of the discussion, so make sure you listen to part 1 if you haven't already done so. It'll just make a lot more sense if you do.
The investment situation, the income is rolling in the whole time. I had put it into these income vehicles, and I just basically forgot about it. It was just rolling in, the whole time. So then, here comes 2008, and you had the subprime toxic meltdown in the real estate market. Nobody saw this coming, unless you were a few gifted people out there in the world. Not many saw this coming. And the leverage behind all that toxic subprime packaging into finance vehicles that you could buy into funds. They basically packaged all these subprime toxic mortgages into these funds you could buy.
The amazing thing about that crash was that it only took 4% of loans to default. To bring that about. You think about that, and that, I mean, as drastic as everything got, as much as everything fell, it was 4%. That's it.
Yeah. Well, there you go. There's the margin, right?
Yeah.
The margin. So when that came crashing down, I had no clue, that was going to happen. And at the time, I had put my money into some Canadian companies that were doing natural gas and oil exploration up in Canada. And I was rolling in about 16% in dividends from this.
Oh, nice.
Yeah. And so I had some big dividends coming in from that. And what happened was, when the economy shut down as bad as it did in 2009, when the crash occurred in 2009, these things basically got cut in half. Some of them, lost totally, completely off the charts, gone,
Yeah.
And so what happened was, I lost half my wealth, basically.
Okay.
And there were times where prior to that, I had brought my wealth up on some of these investments, and I was feeling pretty good about, creating more wealth. But then all of a sudden, I lost half of it. And so I was devastated, and I thought, oh my gosh, how long is this going to happen? Because in the midst of this, while it's happening, fear sets in. I didn't panic. I didn't sell. I figured, I'm not going to panic. I'm going to turn the TV off. No more CNBC. I shelved the computer. I didn't do anything with the market. I went out and did gardening. I did anything to stay away from looking at that stuff. And but I was thinking, gosh, what do I do? Because what if it keeps, meltdown keeps occurring? You had Lehman Brothers, which was around 150 years, completely meltdown and completely gone. Multi-billion-dollar bank. So what's going to happen? Is everything going to completely go to nothing or down to 20% of, of 100? So I was very worried about that. And I thought I'd better get my licenses back. So what I did was I looked into, well, what do I have to do to get my CRNA back? And I was kind of like, wow, I got to do a lot, basically. So I had to find a residency somewhere in the country that would take me to do the clinical. And I had to do some academia. And so I went and I did the academia. And that wasn't hard. It was like a 3-week thing I had to do. Because I was out for 5 years with no license, because I had that business for 5 years. Even though it was 10 years since I practiced, I still had a license for 5 years. And so I was gone for 5 years from having a license. That meant I didn't have to sit for boards, which was really great.
Oh, that is nice.
That was very nice. But I had to, on the clock, get a clinical residency somewhere in the country. Nobody would touch me. And they couldn't figure out, well, why would you be gone for 10 years on anesthesia? I want to get back in. Is something wrong with you? Did you have a problem of some kind? All kinds of negative things come up about why this person may have this profile. Well, MGH, Massachusetts General Hospital, of all places affiliated with Harvard, gives me a call and says, hey, we'd like to interview you. I'm like, wow, really? This is unbelievable. So I flew out there and I did this 8-hour interview, the biggest interview I've ever had in my life as far as time. It took all day.
Oh, man.
And they basically said, okay, we'll bring you in. We're going to give you $160,000 a year. You'll be under our wing for 1 year as far as, your clinical residency. And then you're going to, as a gentleman's agreement, stay with us for 5 years.
Okay.
I said, okay, that's what I'll do. And so I flew back with my wife out there. We started looking at houses out there and, nailed down a few places we might want to go, and came back. And then I got some phone calls from the board in Massachusetts saying, hey, you can't come in here as a CRNA having not, been recertified, and then, come in here and then get and recertify here. You can't do that. Our laws are different. Okay. So they have these blue laws, medical barriers. So you just can't come into that state and redo your certification through this residency. You can do the residency, Mass General will do it for you, but we won't accept a recertification done. So if you lose your certification, you can't come in here and recertify in this state. Okay. So I couldn't believe it, but it actually, knocked me out there. So I thought, oh gosh, hope was lost. And the next thing that happens is I get a call from the chief of anesthesia of this group where I was doing plastic surgeries. CRNA, Ken Kane, good friend of mine. And
you're talking about, so 10 years before that, the group from 10 years before.
From 10 years before, right? And so he gives me a call, and I see him every few years, we get together and stuff. But he gives me a call, and he says, hey, I heard you're trying to get back in. And I said, yeah. He says, well, why don't you come with me? And I said, that would be great. I said, but, you just do plastic surgery, anesthesia plastic surgery. I need a wide population of surgery in order to satisfy this clinical for recertification. So like in anesthesia school, you have to get the different anatomical categories, the different age groups, the risk factors have to be there, et cetera, all that. And so he says, well, I just got this outpatient surgery center. It's the busiest one in Southern California, up in Murrieta, California. And we do all that stuff. I'm like, what? So, here this CRNA that had done nothing but plastics took on this contract, and it was new. It was only there about a year. And so that's where I went. And he talked to the medical director, and he says, yeah, fine. And so in that place, it's total autonomy. It's a CRNA only practice. And, you get a wide variety of cases, everything from a 6-month-old baby to people, 100 years old, and all kinds of cases.
Cool.
It was great. And so it worked out great. I got my license back. After I did the time, he signed the paperwork. I got my CRNA back. And so I started back there as getting paid on a basis. In the meantime, I had redistributed my stocks from the ones that got hurt really bad into technology again, where I knew the best. And so I went into Apple prior to their first iPhone launch, probably 6 months before, right?
Yeah.
And I went back into Qualcomm in a big way. So what happened was I actually tripled the money eventually.
Yeah.
And so not only got back, the 50% that I lost, I had to make 100%. I had to make 100% to get back to where I was. So 50% down, you have to make 100% to get back to where you were, right? Yep. And so I actually tripled it. So, it was wonderful, and I'm glad I didn't lose faith, because a lot of people during those times, they lost faith in the market and they never went back in. That happened. It also happened in the dot-com bust. People left the market, never went back in. People do that, and they get completely embittered by it, and they don't live to fight another day in the market. So what happened was that the success came back. And so I actually pulled it off twice.
Yeah.
This first time was with Qualcomm. The second time was with Apple, because with Apple, as Apple came out with the iPhone, I realized, hey, something huge is happening with this. And I moved more money into Apple. And eventually, I had a lot of money into Apple. Like, I had concentrated investment into Qualcomm back in the 90s. I concentrated investment in Apple, and Apple just was an enormous success. So I repeated what happened with Qualcomm and Apple.
Yeah. Yeah.
So that's what got me to the triple,
So what made you invest in Apple like you did? Did you have a similar process where you just did a ton of research on the company itself? Or, I mean, at that time, Apple was still pretty well known. It wasn't like Qualcomm being a completely unknown company at that time. But what kind of research did you put in at that time?
So with Apple, it followed the basis and fundamentals of Qualcomm in a lot of ways, because Apple was a device maker, and Qualcomm empowered device makers. They basically made chips that went into the phones that caused the different generations to occur: 2G, 3G, 4G. Now we're on 5G. And so with Apple, you had the iPod, which kids were going around their neck.
Oh yeah.
With the nice white.
I had an iPod at one time.
You had an iPod, right? So it was wonderful. And they had come out with a PDA, which was like a Newton, they called it, which was sort of like an iPad, right?
Yeah.
But it wasn't. It was not a success.
No, I was gonna say, I don't remember the Newton. So
yeah, so it was very like, here it is, and then a short life and it was gone. And so the reason why that happened, Bobby, was because the world wasn't ready for it. Simply that. That's all it was. And Apple learned a hard lesson with that and realized, well, we can revise this into something that might work. But the reason that my attention got caught with that was because it used a cellular chip in it. Okay. It used a cellular chip on it. And so I knew they were doing stuff in the background, and they're very secretive about what they do. But you could see the evolution So if you look at different companies and the evolution of cell phones, you saw the screens getting bigger.
Yeah.
The the numbers on the phone that you would tap to make the phone call smaller.
Mm-hmm.
And you could see they were getting a little smarter, but not quite there. And you knew that if they ever did put that PDA, the Newton, into a phone, come up with their own phone,
Mm-hmm.
they would have something. So I had some instinct about that. And with Qualcomm being, the intelligence behind all the data sharing in phones, because what happens with Qualcomm is their transmission technology, they connect people to the internet. They are, in fact, the first company that ever connected a smartphone or a phone to the internet.
Okay.
Internet protocol is basically what they use to connect so they went beyond voice
Mm-hmm.
with and so that's how phones started to evolutionize into become smarter. And you can see that happening with Apple, right? But at the time, the iPod was extremely profitable and very popular. And I thought, you know what, this is like people wearing jewelry. You could see it. It's a wonderful consumer item.
Mm-hmm.
If they ever evolutionize that out to a phone, you're going to have something big. And sure enough, that's what happened. It only happened a lot quicker than I thought it was going to happen. So 2007, next thing you know,
Mm-hmm.
wow, they're on that pathway.
So you invested tremendously in Apple over the last 10 years, and obviously Apple has done, a bang up job
Yeah.
from a share price standpoint.
Yeah.
How would you say that your investing style has evolved over the last? I mean, you've been investing since 1982, you said, so
Yes.
nearly 40 years. How has that investing style evolved? You started in mutual funds, then you went into common stock, but then from there, what have some of the changes been? What are some of the mistakes that you've made and things that you wish you'd done differently?
Yeah. Well, definitely the mistakes that I made were going after, tremendous yield. That is, someone paying you 16, 17%
Mm-hmm.
in a stock market, stock, you have to look at that and say, why are they paying that? You know what I mean?
Mm-hmm.
And so at the time, I was blinded by how much dividend was rolling in. So that just meant that, I'm going to have a couple 100,000 more a year coming in than I would if I went into something that was like 5%, stock yielding 5% dividend, for instance. Mm-hmm. So my mistake there prior to 2009 was putting it into stuff that too much into super high yielding stuff. Those were the things that collapsed to half their value.
Yeah.
Right. And so the stocks that basically pay, 3, 4, or 5% dividends didn't collapse like that. And so that was a big mistake there. And I learned from that. And so Apple doesn't pay a big dividend at all. But what happened was there I saw growth. So alpha. So you talk about, anesthesia instincts. You got beta and alpha drugs. So alpha is growth in the stock market, and beta is kind of consistency. And so alpha, looking for alpha in the market growth, in Apple, I felt would outpace anything that would be paid out in dividends. In other words, I'm going to a different strategy now. Instead of waiting for dividends to roll in, I'm just going to sell off a couple shares every now and then when I need some money.
Yeah.
If the growth is, being multiplied. And alpha was a huge multiplier in growth. Mm. And so I really created a lot of wealth with that Apple stock concentration. So I really concentrated a lot into Apple, going into it for alpha and growth. And so I would sell pieces of it off. The house that I'm sitting in right now is basically a beautiful house, and I bought it with mostly Apple stock. Yeah.
Okay.
Yeah, to give you an example.
That's pretty cool.
Yeah. So if you can peel off that much and buy an 8,500 square foot house in Southern California.
Yeah.
And this is one of the most wealthiest areas of San Diego. Very high affluence here, gated community, and you can buy, into that with just selling some shares off.
Yeah.
That's pretty amazing, right? And
Absolutely.
So that was a big change there.
Okay.
So what happened from there was basically I relied on growth, and then I was also working part-time in the background, and I had that as security. And so I felt a little more emboldened to go with growth rather than, dividend, the constant dividend,
Yeah.
security.
I like
So,
that. Being a
yeah,
CRNA gives you the opportunity to take a couple more chances.
it does. It does. That's the wonderful thing about our profession. And, a lesson I learned too, okay, was don't give up your CRNA. So you hear people who become successful, like I did. You hear people on Facebook. Heard people say, I can quit my CRNA job because I've got this other income rolling in. You be careful about that, because really, if you just keep your license going, on a very part-time basis, just to keep your license, it's extremely valuable, because other things can fall down, but your license as an anesthesia provider and nurse anesthesiologist will never fall down. It'll always be here, and it's getting better all the time, in my opinion. And so I was grateful that I was able to get it back, and I valued it so much more the second time around, realizing, what a value that is. And so I'm smart enough now to keep it. So
Yeah,
I let that
absolutely.
go. And so that was another very big lesson, Bobby, that I learned.
Yeah.
Don't give up your CRNA. Even if you become a multimillionaire, keep it, because you could reach times where you get squeezed.
Yeah.
Because let's face it, the more money you make, the more you spend, hence this big house. And you can get hurt a lot easier when you spending more, right?
Yeah.
Enjoy your life, but keep in mind, keep your license, because it's very, very valuable. So what happened too with Qualcomm, Apple, is that in 2019, we take a yearly trip to Hawaii. So my wife and I, and so we went to Maui. And on the way there, I basically wanted to watch a movie on my laptop, and picked a movie called Contagion. The reason is because there were, rumors coming out of Asia and China that there was a virus, and that they were shutting down a city called Wuhan in China.
Yeah.
And I thought, that's bad, like, what's that about? So I'm going to watch this movie Contagion on the way over there. It might be a bad idea, but I'm going to watch it.
Yeah. Yeah.
So I downloaded it on the computer before I left, and I watched it on the plane, and my eyes were like this when I, was watching this, because I'm thinking, my goodness, if this happens, and you could see it happening in China, if this spreads globally, this could be unbelievable as far as what the markets will do, stock markets, and what the economies will do, right? And so I got over there, and I couldn't believe, I watched this movie that, we're in this situation, and really it was being downplayed in the West quite a bit.
Yeah.
It was being downplayed in Europe quite a bit. And so I took it a lot more seriously. And I started honing in on what was going on, and pulling stuff up in Asia, news and thinking, this is not good. And then, so I went to Maui every year for an anesthesia meeting over the President's Day weekend. So this is in February. And so it's President's Day weekend, and then the stock market was closed on Monday because of it. Well, Tim Cook, the head of Apple, gets on the news and says on a Sunday, I think it was Saturday night, prior to that Monday, that they're closing all the stores in China. And I thought, oh my goodness. So I'm heavily concentrated in Apple.
Yeah.
This is very meaningful. I know from before that, I got caught in the downturn in 2009. I'm not going to let that happen again.
Mm-hmm.
I was a little smarter in the dot-com bust. I got out before that completely happened, although, it started to happen when I exited. So Monday, I'm going to sell everything.
Okay.
Monday after President's Day of February of 2019, or 2020, sorry.
2020.
2020. And so what I did was I put in orders to sell everything in the pre-market, which is pretty bold. That means you go in, before the market opens, and you're selling. And I thought, I'm just not even going to give it a chance. I'm going to take the chance to do it in pre-market. So instead of 9 o'clock and 9:30 in the morning when the market opens, it started selling it at 8 o'clock in the morning in New York. So next thing you know, it sells it all out. And sure enough, the market drops huge. It dropped enormously for that day and the following day. And so what did I do from there? On the second day, I basically came out and bought in.
Yeah.
And I bought in at the close, towards the close, the last 15 minutes of the market, all in on Apple. This happened repeatedly over the next 3 weeks. I bought and sold Apple on almost a daily basis. Really, it was like every other day. And I was reaping huge profits because it was basically like a sine wave.
Yeah.
Okay. The market was a sine wave, and it was headed down and went down like what 35%. And Apple fluctuated on this sine wave, and even though it was going down, I was able to profit by selling on an every other day basis, basically, sometimes every day. And I profited really, really amazingly. And then I got out.
Yeah.
And I thought, let things stabilize and see where I go from there. Once I did that, I put it into a variety of stocks that were completely crushed by the downturn. What I'm talking about are like malls, real estates, REITs that hold malls, Simon Properties.
Yeah.
Another Physicians Realty Trust, symbol DOC, DOC. I put it into energy companies because energy had gotten crushed on top of being crushed. And I figured eventually the market's going to come back and they're going to want to drive again. And so I put it into an ETF, the XLE, or energy.
Oh, yeah.
ETF, right?
Yep.
I put it into a midstream company called Magellan that refines oil to gasoline, right? And then I put it into the pipelines to carry it. Another company, Kinder Morgan.
Kinder Morgan. Yep.
Okay.
Yep.
Yeah. So you know them. And I waited.
Yeah, they got hit pretty bad during the downturn. And,
they did.
With the oil prices going down and whatnot. So
yes. And I watched what the Fed was doing, and the Fed said, we are going to, douse the market with money, liquidity. A waterfall of liquid money is coming in, and they created it by just computer digits, right? It's amazing how they did that, and they basically, poured all this money into the market, and then what they did was they started. They came out and forecasted that they were going to buy bonds specific bond funds, like an ETF called JNK, Junk, which is a high yield bond fund. A few others, HLD, I think it is. I put money into those because I figured, okay, if the Fed's going to come in and buy those, I want to be in there before they come in. It was so easy. Sure enough, they came in and they bought it. Well, all these things went up. Okay, so you have value. That is, all these companies got crushed during the downturn because of the consumer not being able to partake in the economy. I put a lot of money into that. I ended up with 14 stocks, and the weighting of it, I put half of it into Apple. I kept half of it into Apple.
Okay.
And half in all this other stuff.
Okay.
A barbell approach. A barbell approach. I didn't know it was called that at the time, but that was my instinct. Later, CNBC would be talking about, this is what we recommend, and we're calling it a barbell approach.
Yeah.
Well, that's what I have. I've got a barbell portfolio.
Interesting.
It worked amazing. And as value went up, vaccines come out, and people got confident that we will eventually recover. The value stocks went up. The property stocks went up. The oil stocks went up. The bonds went up. If they went down because something bad came out, like the Johnson & Johnson vaccine wasn't what we thought it was, Apple would go up.
Yeah.
Okay. And so it was interesting because Apple basically held a strong position during the first portion of the downturn because of the at-home people buying the products, the Macs and everything. And then eventually it hit the top, and it's been just kind of flat, and value is performing better, right? So I recently got out of Apple because Apple did hit the top. Its PE is way high historically than it's ever been. And my opinion is that they basically, they're not going to be coming out, with something as amazing as the iPhone 12 was, which started this super cycle. And they're just going to have incremental improvements. And, it's possible they can come out with something off the wall like an Apple car, but I think that that's off a little ways. So I think I've got some time. So what I do is I sold out of Apple and I put it all into Qualcomm. I had a lot of Qualcomm, but I put it all into a concentrated investment in Qualcomm. Why? Okay. Because 5G is now the big emphasis. 5G goes into chips, go into Apple products. 5G goes into Android, it goes into iOS, it goes into the Internet of Things. The difference now with Qualcomm is they not only have the radio that goes into the cell phones, right, the chip technology, but they have the Internet of Things. They're going to put chips into automotive, refrigerators, healthcare devices, things in the OR are going to have chips that will have AI in it sent by 5G, where you pull up a patient's anatomy while you're doing surgery on them and see it in a glass in front of you. That's all coming because of 5G. 5G is an enormously different type of technology. People don't realize, they think, oh, 5G is just a big, jump from 4G on the phone.
Yeah, you just put up a couple more cell phone towers and that, and that's it.
Yeah. But this is completely different than anything that's out there, because 5G will basically put a server in your hospital that communicates with the cell phone towers, never before done before, in the stadium where you go to see sports. And what's that going to do? You'll be able to see 3D at no latency in the communication. So the upload and the download, that latency that occurs vanishes. And so you're going to have unbelievable, vivid 3D AI stuff going on, things you can't even imagine. Qualcomm is basically at the helm of this. And remember, they have the patents. So they have the patents on 5G about 40% of all 5G out there. It used to be with CDMA, they had like 95% of the panels.
Yeah.
They have about 40%, but that's all you need. And every time a phone is sold today, whether it be 5G or it be 4G, Qualcomm gets a royalty because the airwave, even if their chip's not in it, and say it's Intel's chip that's making a CDMA chip with a license from Qualcomm, they get paid every time a phone is sold 5% because they have the real estate of the airwave patented. A lot of people don't realize that. Every phone that gets sold, Qualcomm gets a royalty and it rolls in. And so that's why I went into Qualcomm all the way. Now, we'll probably adjust this a little later down the pike and go back into Apple because Apple is amazing. And it gives me a little anxiety being out of it right now. But, you know, this is instinct. And I'm hoping that I'm right about that.
Yeah. Well, Russ, this has been an absolute pleasure. I've really appreciated all of the insight and hearing the real story behind, you know, everything that's gone on with your, you know, investing career, with your anesthesia career. It's amazing how those things have intertwined. And man, this has been such a wonderful conversation. I really appreciate your time today.
Thank you. Thanks, Bobby. It's been a pleasure.
So, and I hope our listeners have learned a good bit too. I think you've been a wealth of knowledge as well. And so this just been an amazing conversation.
Thank you.
So, I hope that you guys got as much out of this discussion as I did. Russ has had an amazing journey as an investor. There is so much to try to break down, and I can't possibly touch on everything here. He was a first mover in an up-and-coming industry. He also researched a ton and knew what he was investing in to the point that he could have conversations with professionals in the field of telecommunications. That level of in-depth understanding allowed him to recognize investment opportunities and then jump on them. Russ is a risk taker, but he found his ability to take risks challenged when he gave up his anesthesia license. This hampered his ability to prepare for the inevitable downturns in the market. Once he reestablished his license, he took risks again and found additional success. For many CRNAs, it just makes sense to keep the license active in the event that something goes wrong. Russ also acknowledged that much of his income was eaten away by taxes because he didn't necessarily anticipate such success. This can plague many investors. Something that I preach is that it's not always about how much you make, but about how much you get to keep. Working with a CPA that you trust to develop a tax strategy is an important part of being a high income earner. I mentioned last week that I was so excited about the discussion that I completely forgot to ask Russ how folks could get a hold of him. Don't worry though. His contact info is in the show notes for both last week's episode and this one. I hope you've enjoyed this two-part conversation. That's going to do it for me though. I'll see you next time on the Plan B CRNA podcast. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On-Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On-Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.